Leon, I want to talk right now about the future of Goldman Sachs. You have a beloved relationship with it. You and I have talked about this many times before. I guess they're trying to be a retail bank. We went from Lloyd over to David. How is your Goldman Sachs doing?
I think they're doing very well. I didn't expect this question. I retired from Goldman Sachs, excuse me, at the end of 1991. So I'm gone for 20 years, 91. So maybe more than 20 years, be closer to 30 years.
Yeah.
And so things have changed, but I have an extraordinarily high regard for the firm. They have a great culture. They're terrific people. But in all honesty, I'm not current.
What do you? Well, okay, that's diplomatic.
I made a big mistake when I got my stock when they went public. I gave it all to charity, and I should have given it cash and kept the stock.
Well, okay, that's a good way to put it. But Leon Cooperman, what's so important here is this experiment of trying to do investment banking, trying to do investment research and strategy as you did in Goldman Sachs Asset Management, and also trying to be a bank. Do you think that can be a successful strategy?
I'm sure if Goldman Sachs pursues it, it'll be a successful strategy. What can I say? I don't run the shop. When I was there, we were a private partnership. We used to laugh about the banks. And then what happened during the financial crisis in 2008, they were forced to become a bank to survive. And, they'll go with the flow. When I was there, they were very reluctant to get into money management. Now they're in money management with 2 feet. So, they adapt to the environment. They're smart people. They're good people. And I would have great confidence in the firm.
Leon Cooperman, Jerome Powell will speak at Jackson Hole today, a virtual Jackson Hole this week, rather, I should say. Tell me how you perceive the interest rate structure that the Fed has set. What has the Fed wrought on global Wall Street?
They have created a real speculative bubble, in my opinion. I have to admit that I'm uncomfortable at the present time not because of the virus. It's a factor. I'm uncomfortable because I'm focused on something the market isn't focused on, and that is the amount of debt that's being created. Who pays for the party when the party is over? We just celebrated our 244th birthday, and basically it took us 244 years to go from zero national debt to 21 trillion. We'll probably end this year at 27 trillion. That is a growth rate in debt far in excess of what the economy is growing at, and I think that that's going to be a problem down the road.
Yeah, well,
and I think they've created a real speculative environment. I was just looking, to give you some statistics. Apple announced their 4-for-1 split on July 30th. The 20-day average call volume at that time was 721,000 calls. Okay, this past Friday, Apple traded 2.1 million calls, 3 times the average of 20 days. Okay, and the stock is up 17% since the announcement of the split, and that's before this morning. Tesla announced their 5-for-1 split August 11th. Same thing, big increase in call volume. The stock is up 49% since the stock split was announced, against the S&P up 1.9%. Now, the last time I checked, if somebody gave me 5 singles for a $5 bill, it didn't create any wealth.
Right.
Okay?
Well,
it did not create any wealth.
That was the old calculation. Now this is the new calculation when you've got a big component of Robinhood investors. That's sort of one theory out there. What's riskier right now, the high-flying stocks or bonds?
Well, I think no question that bonds, to me, present a return-free risk. And that's what's working in favor of the stock market. What I've not fully appreciated is what a zero interest rate environment does for stocks. I was focused on the fact that we've had zero interest rates in Japan and Europe, and their stocks are 5 or 6 multiple points below the United States market. So I think low interest rates are indicative of a problem economy. We've had artificial support for the economy since 2008. It's 13 years. And I don't look at that as being a positive. I look at that as possibly being a negative. You're Stephen Ratner, close to Mike Bloomberg, who I have enormous respect for, basically wrote an article this morning in the Times op-ed piece, the economic recovery that isn't. I think that the zero interest rates is creating a very speculative tone to the market. I have said for months now that we're really dealing with 3 markets, not one market. The first market is the FANG market. And frankly, these are very fine companies, these technology companies whose demand has been pulled forward by at least 5 years due to the virus. They're not cheap, but by the historical standards of the Nifty 50 of 1972 and the technology bubble of 2000, they're not in any way expensive. And people could conjure up whatever they want to conjure up.
Leon, I want to go through this, and we should mention to all of you on our simulcast, we welcome you to Bloomberg Radio and Television. We are with Leon Cooperman of Omega. Of course, he's mentioned Mr. Bloomberg, the founder of Bloomberg LP, this radio and TV property as well, and also Mr. Ratner writing today an essay on the market. Steve Ratner, of course, managing some of the assets of Mr. Bloomberg, and of course, he's appeared with us many times before. Leon Cooperman, to the world of Stephen Ratner, you learned at Columbia Business School of a 60-40 or a 60-30-10 efficient market and proper asset allocation. What is the Cooperman theory, given the distortions that we have now? Can you stay with original investment science, or do you have to invent something new for the next 10 years?
Look, I'm 77 years of age. I have no clients. I retired at the end of 2018. And I do what makes me comfortable. Right now, I have very, very, very few bonds. I think bonds represent a return-free risk. And I own, I was beginning to explain to you, there's three markets out there. There's the FANG market, richly appraised, but not ridiculously appraised, okay?
Yep.
Then the Robinhood market, which is ridiculous, totally ridiculous. Regrettably, I said this on TV about a month ago, that market would end in tears. And the very next day, some young man who lost $70,000 day trading committed suicide. Okay, Carl Icahn is as bright as they come. He liquidates his position in Hertz at 72 cents a share, and 3 weeks later is trading at $5. And you check into what's going on, it's on the Robinhood platform. Eastman Kodak, Robinhood platform. Tesla, Robinhood platform. So, that's going to end in tears. I have no interest in that market. It's not rational to me. I don't spend time on it. The third market, there's things to be done, and that's everything else. So I give a shout out to my former partner, Sam Martini, who did great work on something called Mr. Cooper, C-O-O-P. I own it. Okay. I like it. I would add to it right here, right now.
Right.
He did work. The work he did was knowable by anybody. Okay. He's a digger. He's smarter than the average guy. The company 3 weeks ago reported earnings in their second quarter, $500 million in cash earnings, which was 50% of the market value of the company in 1 quarter. Okay. Well, everybody was thinking about the stock being worth 12 or 13. Now they all think it's worth.
But Leon, just because of time, I want to circle back. We were talking about the future of Goldman Sachs, the future of global Wall Street. Can you own the banks here? And if Mr. Diamond is running the sterling performer of the banks, can you acquire shares in J.P. Morgan this morning?
I could. I own Citibank, and I'm concerned about financial conditions generally, so I'm not adding to my banks, but I think they're probably cheap. They're a cheap group in the market. You keep perseverating about Goldman. Don't worry about Goldman. Goldman will be just fine. They'll go with the flow. They'll figure out what they got to do.
All right.
They'll do it well.
Well, Leon, perhaps don't worry about Goldman, but what about hedge funds? You moved to a family office. If you were starting your career out now, would you start a hedge fund, or would you stay in the private realm? Would you stay away from that industry?
Let me tell you what's happened, okay? And maybe indirectly I'll answer your question. If you came to me in 2008 and said, Lee, I want to invest in your hedge fund, and I said to you, no, you don't want to be in a hedge fund. You want to be in a relative return vehicle. Hedge funds are hedged. Basically, they have a short position. We are now in front of a 10-year bull market in the economy, a 10-year bull run in the stock market. You don't want to have any hedges on. You want to be balls out investing. You would have had me arrested. That's exactly what's happened. Okay, now everybody says, well, the passive indexes have beat the hedge funds. We don't want to be in the hedge funds. And you have to ask yourself a question. Is now the time you want to be fully invested on the long side and not have a hedge on? And I'd say, no, I think hedge funds make sense now. So the people that went into hedge funds in 2008 are disenchanted. But the fact is they made that decision. I retired at the top. I retired due to my arthritis, and I wanted to have a life of my own. I'm basically
Well-
very focused. I'm very focused on philanthropy now. You know, I tell the young kids that I meet with that, you know, I give them a quote. I got to find it. I don't have
Okay.
it.
Leon, we're out of time. All I can say is that's either a phenomenal backdrop in front of three guys on Madison Avenue or the island you're on. Lisa and I want to visit
Oh my
here
God,
in
yes.
February.
Let me
what we want.
explain. I am totally illiterate technologically. I pressed a button on my computer. That background appeared. I can't get rid of it. I'm in the basement of my home in Short Hills, New Jersey. I am a Florida resident. And I'll
So
be going
you're
back
doing
to
this to
Florida
get a tax dodge from the IRS. That's what he's doing.
I've been a Florida resident for a
Okay.
decade. I love it down there.
Everybody,
Good talking to you
Leon
guys.
Cooperman's in Florida today, and for the other 181 days, he's got to be there.